Hi everybody, Ahmad Sadiq from Land Trust Title of Central Florida. Let's talk title. Today, I wanted to spend a little bit of time talking about the difference and the benefits of tax certificates and tax deeds. We see these come up sometimes in our real estate transactions, in particular when there's been a tax deed in the history of the title and the chain of title. In the last 4 years, there's some additional hurdles that we have to cross in order to be able to effectively close that transaction per underwriting guidelines. But ultimately, all of us that are in the state of Florida are required to pay property taxes, and those taxes are payable November 1st of each year for the year that we're in. January 1st of the year, the property taxes become an automatic lien on the property. In November 1st, the property taxes become payable, and you can pay those all the way through March of the next year. If property taxes are not paid by April 1st of the following year, those taxes are going to become delinquent. At that point, the county is going to take additional steps to collect their taxes up to issuing tax certificates. And what that means is within 45 days of taxes becoming delinquent, the county is going to publish a list of all of the properties that have delinquent taxes in some type of a publication, either electronic or in a newspaper. And then 60 days after those taxes become delinquent, the county is going to issue the opportunity to purchase a tax certificate. And so what that ultimately means is individuals and entities that want to bid on those outstanding taxes can do so. And the bidding process works where ultimately if you wanted to pay those taxes as an individual or as an entity, you would bid on the lowest amount of interest you would charge to pay those taxes. And then ultimately at some point in the future, the property owner or someone with an interest in the property, so that would be someone that has like a lien on the property, or someone that, like for example, a bank that might have a mortgage on the property, can come in and redeem or pay those taxes up. And then the person that has a tax certificate would be paid the base amount of the taxes that were owed plus whatever interest that they agreed when they were bidding on the tax certificate. And after a tax certificate is issued, if those tax certificates have not been redeemed by either the property owner or someone with an interest in the property, after 2 years, that individual or that entity that has a tax certificate could petition the county to issue a tax deed sale. Now, the individual or individuals or entity that owns the property has up until the time that the tax deed is recorded to redeem those certificates, but if they don't do so, a tax deed sale will be issued, an auction will happen where not only the person that has a tax certificate, but the public in general can bid on that property and get a tax deed, which they could ultimately use to come into ownership of the property. So ultimately what you want to do as a property owner is make sure that your taxes are always being paid, and this is the reason why a lot of mortgage companies are now requiring that property taxes be escrowed to avoid these types of things. But in particular, in the past, it wasn't a requirement, that there was some people that were losing properties as a result of the tax certificates and the tax deeds. So if you are a property owner, you want to make sure your taxes are being paid. If you are looking to get a tax certificate after April 1st of each year, just keep a lookout for the publication from your county. Each county has its own separate set of requirements in terms of where they're going to publish, whether it's going to be in a publication in print or whether it's going to be electronic. So if you wanted to try to purchase those tax certificates, you could do so. And then ultimately, if you hold that certificate for 2 years without that certificate being redeemed, you can then petition the county to issue a tax deed where you can become one of the individuals that could bid on the property and ultimately come into ownership of the property. Now, in the beginning, I talked about the fact that when we are, as a title company, as attorneys, are getting a transaction where in the last 4 years there's been a tax deed issued on the property and there's been a new ownership, we have to do additional work to make sure that all of the procedural steps that are required by the county in terms of giving notice to the property owners, in terms of giving notice to all parties that are interested in that property, have been properly done. Because if that's not the case, that all of the proper procedures were followed and all of the proper notices were given, the tax deed can be actually very easily overturned if petitioned by the individual that owns the property. So we want to make sure that we go back and we utilize access to public records to make sure that every single procedural step was followed in issuing that tax deed. And we want to make sure that the person that's going to purchase the property after the tax deed has been issued to the new owner is going to be able to take the property free and clear. So there's a lot of hurdles to overcome. There's a lot of investment opportunities if you're looking to purchase tax certificates, which might ultimately yield a tax deed. But we want to make sure that all the proper procedures are followed so that if you are purchasing a property as a buyer, where in the history of the title in the last 4 years, a tax deed was issued, that you are taking that property free care of any interests of anyone that had any interest in the property prior to the tax deed being issued. Guys, again, thank you so much. See you next time.